In this presentation, we will record the transaction of the receipt of inventory along with a bill for the inventory received within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the Home tab. We currently have the Open Windows open. To open the Open Windows, you go to the View tab or the View drop-down and select the Open Windows items. What we're going to do here is have the inventory that has now been received. So the process here, if we look at the Vendors tab, which is where we typically buy inventory if we are a merchandising company, we have up here the purchase of inventory with a purchase order, and then we will typically receive the inventory. It's important to remember that the purchase order doesn't have a transaction to it, and it's a little bit different than we might think of normal type of purchases when we purchase something. For example, when we request to purchase something from like Amazon or something, we typically make the payment at the point in time we purchase it, even if we plan to resell it. So if that was part of our business, we buy something from like Amazon, we typically make the payment, receive it, and then we resell it. That's not what happens in a purchase order arrangement, because we would use the purchase order when we are not paying for the inventory at that point in time. So if we were paying for the inventory at that point in time, we would probably just record the inventory at the point of payment, even though we haven't yet received it, or we can say that we have made a payment and we have inventory due to us in some way, but we would probably just record the inventory at the point of payment. That would be the easier thing to do. If, on the other hand, we're have a purchase order for the inventory, have not yet paid for it, have not yet received it, we use the purchase order, and then when we receive it, we record either the bill or payment at the point of receipt. Now, last time in the prior month, we did some examples where we just received the inventory and went straight to writing a check for it and recorded the increase in inventory and the check decreasing the checking account at that point in time. And if we were to do that, if we were to write a check for a purchase order that we had created that is still outstanding, then these two would link together. We could link them together, and the purchase order would help us to generate the check. That information would help us to populate the check. We now are going to go through the more standard process, which is we're going to have the purchase order, then we're going to enter the bill, then we're going to enter the check. So we got the purchase order. Now we ordered a Fender guitar here, a Squier guitar, and that's what we are now receiving. So we're going to go and say it came into our warehouse, and we're going to check it and see that the purchase order lines up, or the guitar we have looks like what we ordered in the purchase order. And now we're going to enter it into our system saying that we have a bill, which will increase accounts payable, and we have the related inventory, which will increase the asset of inventory. So I'm going to select this little drop down where we have the difference between to receive inventory with a bill or without a bill. In this case, we're going to receive the inventory with a bill. So receive the inventory with a bill. And then we're going to have the vendor for the bill. If we select the drop down, we're looking for Fender, the vendor being Fender, or we can just type it in there, Fender. And then once it populates for us, I'm going to select tab, and it's going to say, hey, we don't see, or we have a purchase order that exists for this vendor. Do you want us to use this information to populate this? So I'll read it more exactly. Open purchase orders exist for this vendor. Do you want to receive against one or more of these orders? We're going to say, yep, we do. And so we'll say yes. And there's the purchase order that we have. We're going to say that's the one. Make sure to check it off or else it won't pick up the information. And we're going to say okay. And then it'll populate for us. So the date we're going to have within our problem is going to be the 14th. To get there, I'm just going to use the plus arrows to get up to 14. So 21419. No reference number. We're going to have the amount 168. Where did it get that number? It got it from the purchase order. So it just took that number from the purchase order, and that was taken from the item. We're going to say that the due date is 2/24. We will keep the due date here. That's going to be given by the standard terms that we have. I'm not going to change the terms at this point, and we could add a memo. I'm not going to add any memo here. And note the bill, it looks similar to a check where we've seen these two tabs at the bottom here. So it looks a lot like a check, but there's a big difference in that the check means, of course, that we're going to be decreasing cash. Now remember that every form that we have usually means that there's one definite side of the transaction by just given by the form, meaning if it's a check, obviously cash is going to go down. If it's a bill, that means something that's going to happen to accounts payable. Accounts payable is going to go up. That's what the bill means. So like a check meaning cash will go down, a bill means accounts payable, what we owe to somebody, a vendor, will go up. So that's going to be the bill. Now it looks a lot like a check because the other side is typically going to be much the same, meaning we have these two things that are usually the other side of the bill, either expenses, if we were to enter, say, all of our utility bills and phone bills and whatnot before we pay them, or the items tab, which will be inventory. And that's what's populated here, the inventory tab. Now again, you might question, well, what's the actual journal entry going to be? It's going to increase inventory. Why couldn't we just go to the expense tab here and find inventory? So inventory is an asset right there. We could just debit inventory account. And the reason we can't do that, or we don't want to do that if we're tracking inventory within the system, is because we won't be able to create the subsidiary ledger for inventory by item. So this is going to increase inventory by the 168, but it'll also give us the subsidiary ledger to support that amount with a subsidiary ledger listing the types of inventory items we have and the related costs to them in a similar way that accounts receivable is going to be supported by who owes us money, not just the accounts receivable. We have to have a customer so it can tell us who owes us the money. So if we're tracking inventory in the system, we need to have this information here. And this, of course, populated automatically from the purchase order we created. So we've got the item, we've got the description, the quantity, all populating automatically from the purchase order we created in the past. We also have the customer that has been created here, and I'm going to go ahead and close this added window out. We have the customer, and that was put on the purchase order as well. It's not a required field on the purchase order, but if we do add a customer, it'll help us to populate this information as we create the bill and then as we create the related invoice or sales receipt. Note that we have the billable amount here, and that's going to basically tell us that it's going to be something that we're going to pick up on the sales receipt or on the invoice as we create it. And then this is the related purchase order if we wanted to go look up the purchase order. So the journal entry here is going to be increasing accounts receivable, the liability, it's going to be increasing inventory. We'll record this, take a look at the purchase order, and then take a look at the forms in terms of the balance sheet and the income statement. So let's save and close. If we go to the purchase order up top and we were to find that by going to the back and back, here it is, purchase order 1003, received in full now, has now been received. Here's the information that helped us to populate the bill that we just entered. Going to close this back out. We're going to go to the reports now, reports, company and financial. We're going to go down to the balance sheet. And we'll make the dates, I'll customize the dates up top. So customize report, dates 01/01/19, 12/31/19. And we will go ahead and say OK. And so this is going to be our information here, and we know that the inventory went up. So here's inventory. It should have increased, double clicking on it. We're going to say here it is, here's the Squire inventory on 2/14 that we have here. If we double click on that, here's the bill. We're going to close this back out and close this back out. The other side is going to be the liability of accounts payable. There's the accounts payable. Double clicking on that. We're going to say here's the 168, the split's going to inventory, double clicking on that. There's the bill. Close this back out, close this back out. We can also see that the accounts that will support these two accounts, meaning inventory, should have a subsidiary report to support it. There's the 2112. If we go to reports, if we go to inventory, and we go to the inventory valuation summary, we should be able to support that number, same date, 12/31/19. There's the 2112, and we purchased the Fender SQ Squire here. So here's the Squire. If we double click on that, we can get some detail related to it, 01/01/19, and we can get to that same information here. So if we close this, I'll keep this window open, but here's the amount. Remember, it's not the retail value, that's what we sell it for. It's on the books for the cost. And then if we go to the balance sheet again in the open windows, and we want to support this number, the accounts payable, we go to the reports up top, we go to vendors and payables. I'm going to use the vendor balance detail, and then go to our information. So I'll keep it here. Here's our new information there. There's the bill. So our accounts payable total is at the 168. This is the only person we owe, the only vendor we owe at this time, vendor being that vendor. So if we double click on that, here's the bill. So if we close that back up and close that back up, there's the transaction related to the bill related to a purchase order for inventory. Okay, so now we're going to do this again. Also note that there's no transaction on the income statement here, of course, because all we're doing is recording the inventory. We haven't sold it yet. When we create the invoice or the sales receipt, that's when we sell it, and we would record the expense of cost of goods sold and the income of income or revenue or merchandise income. Okay, so now we're going to do this again. We're going to go back to the Home tab, and we're going to say we received some more guitars, and these from Epiphone this time. So we're going to say drop down. We're going to receive more guitars with a bill that we had invoiced for in the past. And it's from Epiphone this time. If we select the drop down, we can see Epiphone, or we can just type in Epiphone and tab. And once again, it's going to say purchase orders exist for this vendor. Do you want to receive against one or more of these orders? And we're going to say yes, we do. And then this is the one. So we're going to say that's the one, check it off, and OK. And so here's our information. And note if you select this little show history, it'll give you a little bit more history related to Epiphone. So here's the POs to be received, so we can always see that. And if we double click, we have a link on it too, so we can double click on it, and it'll give us a report of the purchase order. If we double click on the purchase orders, it'll give us that actual purchase order. So this is the one that we're linking to right now, which was 400 quantity 3 of the Epiphone Les Pauls for an amount of 1,200. So that's a nice little feature here. I'm going to close this back out, and then we'll close this little window, hide the window. Okay, so this is going to be our information that populated for us automatically. I'm just going to tab through this. We're going to keep it at 214 for the date. No reference number. The amount is pulling over automatically from that purchase order we just saw. And remember, the purchase order doesn't have any journal entry related to it, but we still have the amount because that's the amount that we were requesting to pay for this guitar based on our prior transactions with this particular vendor. And then we're going to say the bill due date is 2/24. It's going to be defaulting to the 10 days later. So we'll keep that. We're not going to change the terms or add any memo here. Any more detail you can add, it's good. So memos are good, but we'll keep that there. And once again, remember that it looks a lot like a check, but it's a bill. So a check means it's going to decrease the checking account. A bill means that we're going to increase accounts payable. Also note that like the check screen, we have these two items here, these two tabs. The expenses being the default, we are on items, which typically means inventory items. So we're receiving inventory items. This will increase the inventory account, the asset account of inventory, but we don't have inventory listed here because we're going to increase it by specifically a type of inventory. So inventory will go up by 1,200 on the trial balance or on the balance sheet, but so will the supporting documentation, which will give us the inventory by item, what we actually purchased. So we purchased an ELP, that's what we received, which is an Epiphone Les Paul. We got 3 of them, $400, so the amount increasing will be that 1,200. Note that this screen doesn't have a customer because we did not put any customer on the purchase order because we just want these in stock in the store. So this isn't a custom order. We just purchased them to have them on hand to sell for customers who come into the store, hopefully. So we're going to say save and close and check out this transaction. What's it going to do? Increase accounts payable, increase inventory. So we'll save and close. We'll go back to the balance sheet in the open windows. And once again, if we go to the inventory up top, here's inventory. Oh, that's not inventory. I collapsed this thing. So we're going to go to the inventory up top, is in other current assets, inventory asset. We're going to double click on that. And then we're going to say there's that 1,200. Double clicking on that, there's our bill. Closing this back out, The other side is going to be in accounts payable. It's a liability, current liability. If we double click on that item, here it is. Here's the 1,200. Double clicking on that, there's our bill. Supporting documentation, closing this back out, closing this back out. If we go to the inventory, it's at now 3,312, which should be supported by the inventory valuation summary here in the open windows. So I'm going to go to the inventory valuation summary. There's the 3,312, and we just bought another ELP Epiphone, so we got 4 of those now. If we want to see the detail, double click on it and change the dates 01/01/19, and there's the detail. There's the 1,200, 12,000. Here's the 1,200, 1,200 that we purchased. If we double click on that, there's our bill again. So I'm going to close this back out, and then again, if I go to the balance sheet and we want the supporting documentation for the accounts payable, we're going to go to reports. We're going to go to vendors and payables, and we'll go to the vendor balance detail. And then we'll get this information. Here's Epiphone now at that 1,200. So we owe Epiphone 1,200. We owe Fender 168 for a total of 1,368. That amount, of course, being what is on the balance sheet. Back to the open windows balance sheet. Over here, 1,368. For more accounting information and accounting courses, visit our website at accountinginstruction.info.